Joining me now to discuss all this is Anthony Chukumba, consumer sector head at Loop Capital Markets. Anthony, you look at this and so many questions. The first one to my mind is, what's the balance in the retail sector of people who are passing these incurred costs on in terms of rising prices and people who are just going to eat those costs and hit the bottom line?
So what we have definitely seen is a lot of price increases, and retailers are being very quiet about it because they don't want to incur the wrath of a Trump administration. But retailers,
you saw what happened to Amazon earlier in the year, right? When there was even a hint that they might post on their website, that these price increases are now due to tariffs. The White House hit them back hard. That idea disappeared completely. You can see other retailers really don't want to be caught in those crosshairs. On the other hand, they have to tell public markets what they're doing, and you have to tell consumers what the price is.
So like I said, they're keeping it on the down low. And it's a really sad commentary that they even have to do that, but that's a whole other conversation. But let's be very, very clear about this. Retail is a low margin business. If retailers have higher costs, they're going to pass those along. They cannot afford to eat those costs.
Yeah. So ultimately, what does that mean? If you're an investor looking at this sector, okay, they're going to have to pass on higher prices. Does the consumer in this environment feel like he or she can keep buying at those prices? As the parent of a middle schooler, I can tell you that Crocs market seems like it's going gangbusters. It's not going anywhere. Those kids are wearing those shoes every day of the week, it seems like. But ultimately, consumers are going to be the ones who decide whether they have the appetite for this, right?
That's correct. And I will say, so far, we haven't seen a lot of pushback from consumers. And I think part of that is the fact that they're reading the same headlines as everyone else, or maybe they're seeing it on a TikTok or on YouTube or X or something. So they know that costs are higher, and so they're paying. Now, what I will say is that they are being somewhat selective in terms of what they're buying, and I think that retailers that sell more discretionary products are more at risk. Retailers that certainly sell more higher priced products are more at risk.
Now, the White House argument, I can tell you, because I'm there nearly every day, the White House argument here is that, yes, some prices might be going up, but higher prices don't necessarily mean an inflation spiral. That is, the higher prices from tariffs are likely to be a one-time thing and not an inflationary pressure going forward. Do you see that playing out in the real world?
That's nonsensical.
Nonsensical.
Look, that doesn't make any sense. I can't even comment on that. I have an undergraduate economics minor, and I can tell you that's not how economics works. So
you think we're going to see just this inflationary spiral here, and retailers are going to have to not just raise prices here, but they're going to have to do it again, quarter to quarter to quarter?
It certainly is a possibility. Look, we saw inflation tick up last month. We saw those worse, job numbers, regardless of what the White House says. That's just the reality of the situation. And so, retailers are going to have to respond to that.
So as an investor, how should I be thinking about that? If I'm looking at this retail sector, are there people who are better positioned to weather this storm, or is everybody in the same boat?
Yeah, that's a great question. So there are definitely retailers that are better positioned to weather the storm. So a couple of companies that we like, Warby Parker and National Vision, a lot of that is the fact that glasses are a non-discretionary medical necessity. The other thing is they can pass along price increases because most people don't remember what they last paid for glasses. Another name we like is Savers Value Village.
As you said that, I was just thinking about the glasses I'm wearing right now. What did I actually pay for them? I don't think I could tell you. So you're right.
Right. Exactly. And then the only other name I would mention is Savers Value Village. They're a thrift store operator, and their average unit retail is less than $5. So they could benefit from consumers trading down, quite frankly.
Yeah, fascinating. And I guess the question is ultimately, where does this stop, right? If the tariffs stay in place, do we see this price pressure just continue indefinitely, or is there some point where it breaks and the consumer says we can't go any higher, or companies say we just got to pull out from some of these businesses that we're in?
Look, the taco trade is real, so we'll see how long these tariffs stay on. But look, to the extent that they start to cause significant economic harm, I think a lot of these tariffs will probably roll off.